Good morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday opened on a jittery note on the back of external concerns both from the Greece which is struggling to make its next payment to IMF which is due in June, as well as concerns whether the US will hike interest rate after Janet Yellen's comment. However, domestically also we had poor numbers coming in from both ITC and SBI which dragged the indices down. The index finally saw a cut of over 300 points on Sensex and 88 points on the Nifty. If we look at the cues from overseas, yesterday most of the US and the European markets were closed because of the Memorial Day and will begin their markets today. There is also important data which is lined up there, so those cues would be important. If you look at the Asian markets, those are mixed. Nikkei is down, whereas Hang Seng and Shanghai both are trading closer to its 7 years high. Singapore Nifty is indicating a flattish kind of an opening towards 8362 kind of a level. If you look at the flows yesterday, in spite of huge sell-off yesterday and a negative breath, FI poured in paltry 74 crores in the cash market. They were biased to the tune of 167 crores in the index future, whereas flow from DI was absolutely flat. Now, given that we are going to open on a flattish note ahead of expiry, let's have a view from our derivative desk as to how Nifty is likely to behave ahead of the expiry, which is likely on this coming Thursday.
Good morning friends, we'll give an analysis on derivatives. Yesterday, in line with the international markets, we have seen Nifty starting off with a negative bias and with a gap down opening of around 15-20 points. And later on, we have seen Nifty continuously remained under pressure throughout the day as market breadth continuously remained on the negative side due to selling in most of these sectors like banking, automobiles, fast-moving consumer goods, information technology, metals, oil and gas, and reality sector stocks. Due to which we have seen Nifty closing with a negative bias and with a 1% cut of at around 8368.45. It was like bears back in action in yesterday's trade after seeing 4 to 5 days consecutive on the positive side. In yesterday's trade, some kind of selling pressure was seen by market participants. On the open interest front, we have seen 2% reduction in open interest, that is around 2.70 lakh shares were reduced in open interest. And however, Nifty is still trading at a discount of around 2 odd points compared to 7 odd points in the day before yesterday's trading sessions. On the put call ratio, we have seen Nifty inching lower. We have seen put call ratio going down by from 1.11 to 1.03 levels, indicating significant amount of call writing which was seen in yesterday's trade, as implied volatility have also dipped. That is, volatility index have also came down, and we have seen majority of the build up on the call side in yesterday's trade, indicating call writing was visible clearly in yesterday's trading session. And we have seen simultaneously at the money and slightly out of the money put option have started seeing significant amount of unwinding, which is a bit negative sign going forward for this series. The Indian volatility index, as suggested, have dipped lower by around 1% at 16.92 levels. Now the options activity, as suggested, 8,500 and 8,400 continues to see. We have seen significant amount of build up in fresh position has been added in both this strike price. 8,500 call option have added 25% in open interest. Simultaneously, 8,400 call option have seen 28% addition in open interest in yesterday's trade, and we feel majority of this addition was on the shorter side. However, 8,500 call option continues to dominate in the call strike price with the highest in terms of open interest for the series. While in put option, we have seen a significant amount of reduction in at the money, that is 8,500, 8,400, 8,300 strike price. Majority of the unwinding was seen in 8,400, 500 with around 30 to 35% respectively. And this is we consider as more of the put covering, that is put writers will be forced to cover, seeing the sharp dip by the market participants below 8,400 odd levels. There are two securities in the ban period for today's trade, that is Amtech Auto and Indiabulls Real Estate. On FIS terms, however, despite we have seen 1% cut in Nifty, we have seen FIS being net bias, but the net bias of around 167 odd crores only, and the open interest of FIS and index futures went down by around 1%, indicating short covering was seen by FIS and this downfall. And index options, there were net buyers of 457 odd crores, while in stock futures there were net sellers of 223 crores, and stock options there were net sellers of 117 odd crores. Our 5 days way up stands at 8,400 with a lower range at 8,350. We have seen in yesterday's trading session Nifty took support at around 8,350 odd levels, and we have been suggesting 8,350 could act as a crucial support if market has to hold on its positive momentum going ahead. While the higher range is at 8,450, which is also the yesterday's high. SGX Nifty is trading positive by around 4 odd points, and it's trading at 8,366, indicating some kind of flattish to positive opening can be expected in today's trade. That concludes from derivatives. Thank you.
Friends, let's look at the trading ideas for the day. The first one being Heidelberg Cement. Now the company reported its numbers yesterday, and the PAT came in at about close to 8.2 crore, which is down 83%. Now this is an extremely shocking kind of a number, and the stock could react negatively to this. So one can short Heidelberg with stop loss of 73 for potential downside of 68. We also had SR Oil, which came out with its numbers yesterday. Now the net profit saw a drop of about 46% in Q4 to 546 crore. Gross revenue as well fell down by 30% and stood at 19,252 crore for the quarter. So again, kind of an poor numbers which were marred by inventory losses as well. One can take short position in SR Oil with stop loss of 110 for potential downside of 105, and below that at 102. Moving on to the news section, yesterday Future Consumer, the food and consumer goods arm of the Kishore Biani Group, Future Group, has acquired the personal care business from Grasim. Now this company had a turnover of about close to 10 crore per year, and includes various brands like Cara Wet Wipes and elite products such as Purita, Handies and Prim. Also, Vodafone is set to weigh IPO for its Indian subsidiary. The company has appointed investment banker Rothschild, and which is compiling a report in terms of deriving the benefits of a possible IPO. There is also new listing today, PNC Infratech Limited. Mahindra and Mahindra has launched the new variant of XUV 500. Now the company has made certain changes both to the exteriors as well as the interiors. This variant would be launched in 6 new models, and would be priced at close to 11.21 lakhs ex-showroom Delhi. Also the company is planning to launch 9 new products this year. So some sort of positive news for M&M. Also government has notified rules of Mines and Minerals Act. Bank staff to get a 15% wage hike as per Indian Banking Association in PAC. Moving on to result section, we have important numbers which are lined up today. Vale is likely to announce its numbers. The expected PAT here is 783 crores. Thermax estimate here is 111 crore PAT. Tech Mahindra 732 crores, and Tata Motors, an important one, here the estimated PAT is about close to 4060 crores. Watch list that we've created for the day for you. Stock with positive bias, we have Hero MotoCorp, Crompton Greaves and ONGC. Whereas stocks which one can look to short from intraday trading perspective, we have ITC, M&M Finance and Canback. And stock for long-term investment, we like L&T, Aditya Birla Nuvo, Tata Motors, DVR, Infosys and Ultratech Cement. That's it we have for today's session. Thank you.